Sorry, audio was kind of booty on the last recording of this, so I'm gonna record this again. This is like my third time recording, cause I don't know if y'all watched the last video, but that background noise, dude, it would have been in the same video, cause I didn't post this yesterday, cause the recordings I did yesterday had that background noise, and I didn't want y'all hearing that. So um, yeah, so I'm gonna record this again just for y'all, cause better content for y'all, cause honestly, we had some audio issues. It kind of sounded weird, so I'm gonna just redo this. But basically, what we're talking about today is gonna be imbalances or fair value gaps in the market. Like what they are, why we use them, like how does this benefit us. Honestly, I'm gonna just explain how to spot them, why we use them, what they are, like just like I did with the order blocks. If you haven't watched that, I would watch that. No particular order. You can watch that after this. But since I already have this wrote down from the last recordings, I'm gonna basically show y'all. So, or explain to y'all what it is. So, an imbalance or fair value gap is basically an imbalance in the market. It's an imbalance of market orders, basically. So, it's a price range that lacks orders in the opposite direction. So, if we're in an uptrend and we spot a fair value gap, that basically means we spotted a price range that lacked orders going down. So, in the opposite direction of market sentiment. So why is this beneficial to us? If price revisits that price range and we see buying / selling power out of that range with the same market sentiment, we can assume more orders were filled and price will continue in the same direction. So basically what that means is if market decides to revisit that area, that fair value gap, that price range, we can assume that market's going to continue in that direction. So it's basically a retracement. Don't get this confused for like don't make trades off of this, cuz don't make trades purely off fair value gaps, cuz y'all won't ever become profitable if you're just making trades off fair value gaps. And usually I spot this with order blocks, equilibrium, liquidity sweeps, all of that. I never use these by themselves because they won't ever work. And I was actually able to hit a trade off one of these fair value gaps, and along with my other things. Here, let me show y'all the trade. Bro, unfortunately, I wasn't able to enter on the trade because I was in school doing school work, and I saw it form, right? I saw all this form. I saw my equilibrium, my fair value gap, my order block. Had an order block right here. Where's it at? Top of this candle right here. That's the order block right there. Yep. And I hit when I was doing my work, so I didn't buy in, but I would have. But it's okay. It don't matter as long as I'm seeing that my strategy works. Basically, it would have been like bag testing. I mean, it doesn't even matter. So right here, let me show you what a fair value gap is. I'm sorry, guys. But basically, a fair value gap, let me delete this, is a 3 candle movement. So it includes 3 candles. It has to be 3 candles because I mean, it's 3 candles. That's what a fair value gap is made of. So basically, how we spot these, it's 3 candles right here. We have a bullish fair value gap. And actually, let me show you this one down here. Bullish fair value gap. So for this to work, we need to see something like these 3 green candles right here. This is a perfect example of a fair value gap. So what we do is that we see this. You see the space in between both wicks, and the first and the third candle. Let me mark it for y'all. So we get the top of the first candle, right, and then the bottom of this third one, like that. So that space in between these 2 wicks, if as we see on the first candle and the third candle, that's our fair value gap. That's our price range. That's our price range right there. This price range, remember, like we said, is an imbalance of market orders. So it's an imbalance of market orders. So which creates a retracement for market orders. So if we see market visit this price range, we know that we might see a retracement. And since this would have been a good trade right here, hit these lows, right? Hit the fair value gap, and what did price do? Go up. It made these highs, This was an hourly high that I marked on the hourly chart. Let's go to that. Oh, wait, up here. My fault, chat. So this hourly high was created off that fair value gap. Which, actually, I think it might be this one. It's one of those two. I don't think it was this one. I think it might have been this one. Either one of those. But I marked it on the, you know. But as we see, as we see that, yeah, so price revisited this area, used it for retracement, also used this, yeah, hit these lows. What does price do? Go up, retraced back up, because this is a bullish fair value gap. So we know that if it visits this area, we might see it go up. And complete opposite for bearish fair value gaps. Let me show y'all one that worked. Oh, let me just show y'all a normal one. So right here we see this fair value gap. Remember this? Same exact thing. But for bearish fair value gaps, we basically get the bottom of the first candle instead of the top of the first candle. So we get the bottom of the first candle and the top of the third candle, and boom, we mark that, and that's our fair value gap. As we see over here, price visits the area, but like I said, fair value gaps aren't to make trades off of only, so it did go past through that fair value gap. So that's completely okay, because we don't make trades purely off based off fair value gaps. Hope y'all understand that, because dude, if y'all are making trades purely off fair value gaps, you probably won't become profitable anytime soon, because that shit won't work. I'm telling y'all now, please don't do that, bro, because it won't work. Promise y'all it won't work. As you can see, like, these failed fair value gaps, like, they're failed, like, it didn't work. So what makes y'all think this is always gonna work? Nah, y'all need to set this up with another covariance, like order block or equilibrium. But like, even right here, what do we have? Bullish fair value gap right in this space. Market. It's basically, y'all, this is everywhere on the market. This isn't just on, like, this is everywhere on the market. But what I'm gonna say is, from past experience, on these bigger time frames, like even on the hourly, maybe the hourly, sometimes they'll work on the hourly, but like the 4 hour, these time frames are like too high for fair value gaps to even be a thing. Because as we know that these fair value gaps in these bigger time frames, remember, fair value gaps are a retracement for orders to be balanced, or they're imbalanced orders. So it's basically a retracement, and orders are being filled within that fair value gap. But on these bigger time frames, if there's a fair value gap, those orders have probably already been filled before the price even entered that range. So honestly, this usually only works for the low time frames, like the 5-minute. That's what I trade. I make trades off the 5-minute, 15 depending, it's my strategy. But dude, I wouldn't do it on these bigger time frames, because it won't work. Well, at least in my experience, it won't work. If y'all find a way to make it work, that's your strategy. But my strategy, I won't ever make trades off of that. But yeah, I had 2 trades that I could have hit today. Got busy with schoolwork, so I wasn't able to hit it when price entered this range. As you can see, I had an order block. Not only did I have an order block, I had lows. And not only did I have lows, but I also had equilibrium. Not only did I have this equilibrium, I also had this fair value gap. So this would have been the perfect trade. I wasn't doing my schoolwork. As long as I know my strategy is working, because I would have easily entered off of this trade, like, no doubt. I would have entered right here. This is the exact spot I would have entered. Why? Let me explain to y'all. Why? Because, so this hits my order block, right? Closes in my order block. Not only does it close in the order block, but it also hit this fair value gap. And it also hit this equilibrium. And right after that, it closes right here. Boom, new candles formed. What does this candle do? Go up. What does it do? Close right above this. So as soon as I saw that close, I would have entered, hit my highs, and boom, I would have sold right there. Easily. Come on, dude. This is the easiest thing ever. These order blocks, if you haven't watched that video, go watch that video, because these order blocks are actually, like, insane, dude. If y'all want me to teach y'all my strategy and which y'all can back test, y'all can do all of that just to see if my strategy works. I can in another video, but the next video I'll probably teach you about inverse fair value gaps, which is essentially almost the same thing but not really. So yeah, I can teach y'all what inverse fair value gaps are in the next video. So yeah, I mean, if y'all have any questions about this, let me show y'all one more time so y'all don't gotta go back in the video. Write this down, journal this, because honestly, even with the order blocks video, if y'all didn't write that down, I want you to go back to that video and write that down, and I want y'all to write this down too, somewhere. It can be in a notebook, journal, notes on your your phone, document, anywhere. Just write this down, because a lot of y'all will forget why we use fair value gaps and what they are, and it's like, dude, if you don't know what a fair value gap is, then you might have to. If you don't know what you're doing, like if you don't know why you're doing that, you can explain to me why you're doing these and why you're entering trades based off these things, like what these things are. If you don't know, how to explain that, then honestly, bro, y'all just have to go back to those first steps of learning how to trade and remember this, because this is essentially why you're making trades. So if y'all don't know why you're making trades, dude, just go back and learn. Just go back and learn. But yeah, I don't have, as much experience as other traders, but even with this little man experience, I know that you need to know why you're making trades. So I mean, honestly, yeah, I'm more of a newer trader, but this information is from past traders, experienced traders. Don't worry, this information is all true. My strategy, I'm not gonna promise. I know it works. I know it works, but for you it might not work because you're not following it 100%. So I'm gonna teach my strategy, but I'm gonna warn you, if y'all don't follow it 100%, it's not gonna make you profitable. You have to follow the exact strategy. I'll teach you on another video. After I teach these co-influences, after I teach equilibrium, after I teach liquidity sweeps, highs, and all of that, after I teach that, I'll show y'all my strategy and how I enter, when I enter, and if y'all have questions about my strategy, if you have questions about this fair value gaps or even order blocks in the past video, go to my description of the video and I got my Discord there, so y'all can message me like I'll respond personally, dude. I'll show y'all personally. Y'all can just send me photos of the stock and what you think. Like, if do you think this is a fair value gap, show me and I'll confirm, or if it's not, then I'll explain to you why it's not, and I'll show you. I'll help you even with order blocks, because I think this is a little bit easier. But if you're having problems with this, tell me. And if you have problems with the order blocks, tell me too. So yeah. But yeah, I'll see you on the next video. Probably inverse fair value gaps. So yeah. See y'all, bro. Good trades. Good trades.